Welcome to episode 3 of the Sphere.it podcast. My name is Peter Ratcliffe. I'll be your host for this podcast. Again, with me is Dan Fiehn, someone who's very experienced in the insurance marketplace, spent 30 years in the game, in fact. So welcome again.
Hello, everyone. Hi, Peter.
Nice to see you again. Okay, so today we're going to be covering the digital native insurance companies. And I think we touched on this in the last episode, something I'm really passionate about and excited about because of the changes it's bringing to the marketplace and the way that we engage with our insurance policies and also, more importantly, the technology that actually powers that, which really interests me. But I just wanted to get your opinion on, the personalised insurance space and how, that's changed through this digital native world.
Yeah. So it is probably an area really close to my heart as well. And so, there's a number of areas that the technology is having an impact on personalised pricing. So you've got things like faster service for customers, improved underwriting, better processing of data, real-time monitoring of risks. You've got the emergence of like usage-based insurance. So it kind of cuts across the whole piece. And it's really built on sort of cloud, the power of cloud processing and being able to take in huge data sets and process them at speed.
Yeah. So we were talking about that in the last episode, so please catch that episode, where we were talking about how these companies are partnering, insurtechs, with these big carriers and the rest of the supply chain, essentially. So we're assuming they've got access to this data. They've got to create that access. There's a lot of transformational work that needs to happen in that integration. So looking at how to get access to the data, building complex pipelines for data, and when we're talking about personalization and we're talking about telematics, all this kind of thing, or even the underwriting where you're trying to connect with the open data market, what's going on in the market, how can we underwrite this risk? You've got to create new systems, there's new paradigms that you've got to visit. You've got to look at things like event-driven, real-time processing, all of these really exciting stuff that's powered by open source technology sometimes, so it's pretty cool. So what is your kind of your angle on that from a technology point of view? Are there any examples that you can give? Maybe talk about the underwriting risk side, how they're leveraging technology to get access to that data. Do you have any sort of...
Yeah, sure. So I think, Peter, this is probably where insurers are kind of most sophisticated, right. their price optimization. So, and it probably goes against what most people think of insurers as being behind the curve.
Absolutely.
So in recent years, many of the insurers have built sophisticated platforms to do this pricing, and they've really built an ecosystem of sort of partners and internal development to kind of do that. So if you take motor insurance, when you go on and you go on to put a price through a comparison website, insurers in real time are taking lots of data, not just the data you're entering about yourself, but from lots of different data providers. And then within the blink of an eye, they're processing all this information, they're running it through sophisticated kind of machine learning models to then individually price that product for you. And they're also monitoring the amount of risk they're taking on in real time through these channels. So there's a high degree of engineering going in there. There's a high degree of sort of sophistication. It has to be done in sort of near real time because...
Is that because of regulatory kind of requirements?
Well, no. So I think if you can imagine you're on a website and you're keying in and the prices are coming, you're not going to sit there for 5 minutes waiting for the prices. So you're expecting prices to be returned promptly. Okay. So there's a kind of... In that kind of customer journey, there's tolerances that the website expects an insurer to return a price.
Okay.
So because of all of the things going on...
So the supply chain is actually putting pressure on the carriers to actually perform better from a technology perspective.
Yeah, if as an insurer you don't return a price quick enough, you won't appear on that that page.
Wow.
So, and if you're consistently not returning prices, the website, the aggregator site, will turn you off from their system because they want customers to buy through them, so they want as many prices returned.
And insurance companies at that early stage, typically, if they're going through delegated authorities or if they're going through price comparison websites, they need that volume to get them into the customer journey so they can get the retention in the future. So they've got to really invest in that point of engagement, right?
So I think if we take motor insurance, in the UK particularly, 75% of all motor insurance is sold through aggregator websites. So it is a significant distribution channel, so that personalised pricing is kind of paramount in that kind of in that marketplace, and so there's a lot of engineering, there's a lot of technology to kind of meet that demand.
So what sort of changes are you seeing in the customer journey itself, though? So for example, I know that you in your past have managed quite a large book of business for previous employers and things like that in the motor insurance field. What kind of changes did you make to the customer journey? Maybe advising those price comparison websites on what you need. Are there any examples you can give me in terms of, because like when I go on some price comparison websites, it's sometimes very complex just to get through it, right? I want to quote now. I don't want to have to put all those details into a system. Have you seen any innovations in that space that make things a little bit more snappy or quicker?
Yeah, so there's a lot of ingestion of external data,
right,
or data enrichment. So when you're typing in information, an insurer will go off and try and find as much about you as it can to help price that risk. Right. So not just information that they might have on their own records, they'll go off to and they'll be paying for this data to then better price it for you as an individual. So so gone is the day of like lengthy forms that a customer needs to fill in, and actually insurer can price very accurately on 5 or 6 pieces of information, right, and then supplement that from kind of external sources. But then it has to then crunch all that data,
yes,
and then it needs to run it through its kind of models and rating structures, and that happens at scale, millions and millions of times a day, at pace. So it's it's a highly sophisticated kind of platform.
So to get to that point, a carrier's got to make a massive investment in digital transformation, right? They've got to sort of think. Historically, from what I understand, a lot of the insurance businesses have been more buy, less build, but unless it's around pricing and quoting, right? But now it's changing. I think these companies are starting to adopt more modern technologies and custom built technology, and actually building teams around these platforms, right? So they have teams of data engineers building pipelines, building architectures which can allow for this.
Yeah, sure. I mean, so it's a point of differentiation for many companies. So there definitely is a hybrid approach where you're building an ecosystem. So where it makes sense to buy in a capability because someone's done it and they're the best in class, then it makes sense to plug that in. But then you kind of put a wrapper around it of internal intellect, which then differentiates you from your peer group. So I definitely see more of a hybrid approach rather than just a build or a buy. It's kind of how do you leverage what's available so you get speed to value, and you can deliver like a piece of high-end engineering that can withstand the volumes that it needs to and is robust and
But is that are you seeing the same in lower volume business? You're looking at the syndicates that probably they might not transact as many policies as, say, a motor insurance company. So do you see any differences in the investment in that custom build side? Or
well, so I think there's a question around how much data is available to then. So it's all led by data. So the more data you have on a topic, then the more accurately you can predict what's going to happen and the pricing. So as you move into more niche areas or sort of commercial areas, the data sets are more varied. So the challenge gets a bit harder. You don't have such large data sets as you'd have in sort of personal lines and motor insurance and household insurance. But definitely that mindset is bleeding across the industry on how can you use data? Are there data sets out there? And this is where particularly things like connected devices in commercial things can collect more data so you can understand more about the risk that you're trying to insure and then more individually price.
Right, okay. And when you're looking at the buy side of this, where you're looking at these vendors that are propping up these emerging innovations that have been around for many years. I'm sure we can name a few, but we won't today. Do you see a lot of partnerships within those fields? So you've got underwriting system X that's been running for 20 years working in the syndicate businesses, and they're looking at insurtechs to augment some of their capabilities into their systems. Do you see much of that going on? So there's a custom build solution that's integrated with an existing system to enhance it, because this system exists as it is today and they've not really moved the dial on that innovation yet?
Short answer, yes. So there is definitely, whether it's happening at a point when you're pricing so much, but definitely across different journeys, there's definitely kind of a partnering model that exists. Right. But then again, I think because of talent shortages and kind of domain expertise, like technical expertise, companies are partnering more with technology firms to kind of, so even if they're kind of building stuff themselves, whereas in the past you'd have created a team, and it's harder to do that. So, companies insurers are definitely plugging into like the open source and all these other things to kind of fast track their digital programs.
Okay, good. So we're looking at personalization. I mean, we want to look at how it's kind of benefiting from the digital transformation itself. So how is that being enhanced through the digital transformation, say, an insurance carrier is making? Is it purely because they can do things faster, or are they doing things more diligently? Are they able to pivot more effectively around the data?
Yeah, kind of all of the above, really. So I think they can do things. If you go back 10 years, most insurers, very few would have been in the cloud. So they would have had their own data centers, their own. So now they've got much more compute power than they've ever had before. So yes, they can crunch numbers faster. They can scale up, scale down. They can, it opens up so much more than they could have done in the past. Obviously, the technology's changed significantly. So the monitoring of the data, the models have moved on, significantly. So the insight that you can get from that data has moved on. So all of these things have kind of produced a perfect storm to, improve pricing across the industry.
Brilliant. Yeah, it's good that it's interesting saying about cloud. It's almost like, the cloud's been around for a long time now, it seems. And a lot of insurers that I've been speaking to have only recently really started thinking about, short of putting a few apps in the cloud and a bit of data, going all in with the cloud, these big carriers. And what we're seeing where I work at the moment is very much we need to be a bit more agnostic in that approach. Where we store our data, where our apps are running, we need to think about the relationships that we have with hyperscalers. So we're no longer looking at companies that are just in one cloud. There's like multi-cloud environments. There's even private cloud environments. There's actually a trend at the moment where businesses are looking to kind of repatriate a lot of their cloud services into private cloud. A lot of people say it's due to inflationary costs around the cloud. I think sometimes you can go in and not expect how much it's going to cost you to do all of this processing, right? So we're seeing a lot of that. I mean, what's your opinion on that kind of approach?
I think you need to be open-minded. So the very reasons for moving to the cloud in the first place, things have changed and moved on. So you've got sort of cybersecurity concerns. You have, if you think that, particularly the example we gave about motor insurance, if you think most of your business is done on the website, so you can't afford for the cloud to go down, so having a slightly more control. So there's a number of factors that would change your thinking, and so 100% different companies will have a slightly different approach. I think the days are gone of kind of building your own, unless you're a very large insurer, of having your own dedicated kind of data center.
I don't know. I think I'm still seeing that. I do see that those investments are being maintained.
But there's quite a high cost then of kind of managing, maintaining those and all that kind of stuff. And I think, but to your point, there will be some where that is the right thing to do. But for some, actually having a sort of more of a hybrid, having 2 cloud vendors, for example, so that you're spreading the love, that's a viable approach as well. So there's lots of different ways of doing it.
Yeah. I mean, you're looking at the way that the cloud is being utilised. Having that hybrid capability is absolutely key. Things like FinOps that can be applied around your cost metrics and things.
But I think going back to one of our earlier conversations about how do you make this relevant for the board, so the technology itself is just an enabler. So really one of the drivers is, you need high performance, it needs to be secure. There's a few kind of things that are really important to a company, and then the way that you solve that problem will differ for different companies.
Sure. Thanks again, Dan. It's been really good to talk to you.
Thanks,
again.
Yeah, really good.
So that's the end of our episode 3. We spent some time going quite deep into some areas. Again, really excited to be doing this podcast. Thanks for everyone here at Sphere.it. We'll see you in the next episode.
Yeah, thank you.